Hey everyone, welcome back to FiscalVoyage. My name is Felix, and today's video we're going to talk about three different companies, dividend growth stock companies that recently announced dividend increases. Some were very modest increase, and one in particular was a double-digit increase. So I'm very excited with that. So I'm going to go over these three stocks. I'm also going to show you my portfolio of these three stocks and show you how they performed. And we're going to go over the fast graph as well as the chart of these three graphs and see where they are, see where the potential to go, and are they buying opportunities right now, or should we sell or continue holding? So if you're new to the channel, make sure to hit that subscribe button. And as well, I'm going to be announcing a newsletter for weekly option income newsletter that's going to come maybe in the next couple weeks. But stay tuned for that. If you're new to the channel, make sure to hit that subscribe button and like this video. So let's get started. Alright, so let's start off with Johnson & Johnson. You can see here from Seeking Alpha, Johnson & Johnson hikes dividend by 5% to 106. The previous dividend was $1.01, and they have a forward yield of 2.61. So that's great. I'm very happy with that increase. If we look here, I'm actually up nice with Johnson & Johnson. Let me go find it in my TD Ameritrade account here. Johnson & Johnson, if we look here, I'm up 62% in Johnson & Johnson, so very well done here. But if we look at the fast graph, Johnson & Johnson does look kind of slightly overvalued, not too extreme as some other companies here in the market, in today's market. But earnings yield is decent. I like it to see it at 6.5%, 7% and higher. The yield is okay. It is better than the S&P 500 yield. Again, solid company, AAA rated, 33% long-term debt to cap. So overall, I'm very happy with my position. I don't have a plan to sell or anything. I'm just collecting the dividends. And as you saw, the dividend increase. If we shorten this time period, like I said, it does look slightly overvalued with a PE of almost 20 at 19.6. This is from yesterday's close, where the company should be around the 15 PE or lower. That's where you would really like to see this as a good purchase, around 142. But if we look at the chart for Johnson & Johnson, you can see here it is an uptrend, and over here you can see that there's resistance in the 167, 170 area. I personally would like to see this, if I was to even consider buying, back to the 200 moving average around the 154 or lower area. You can see here whenever it was at 100, whenever it was under the moving average, it was great buying opportunities. You know, the moving average acts like a magnet on the daily here. And it's the same thing with the weekly. You can see here whenever it hit the weekly 200 moving average, it bounced here, close enough here, and then March lows here. So right now, Johnson & Johnson, very happy with the dividend increase, but I think at current prices, I'm not a buyer. I'll wait for around 150, 154 area before I even consider buying shares. The next stock we have here is Whirlpool. Very happy with this dividend increase of 12%. They were paying $1.25. Now it's $1.40 per quarter, 12% increase. If we look at my TD Ameritrade, Whirlpool is over here. I'm up 106% on this trade here with Whirlpool. Very happy with that position. If we look at the fast graph for Whirlpool, let me go to Whirlpool here. We could let it load here for a second. You can see here it had a huge run up. Right now, the company, in my opinion, looks to be slightly overvalued. Again, a lot of these companies nowadays are overvalued. You can still find some undervalued companies. If you watch some of our previous videos, I mentioned 3 to 4 or 5 different companies that are very attractive and I've been buying recently. But you can see Whirlpool, it is high. It had a huge run up from March lows. You can see here the earnings yield is still very attractive at 8.19. The dividend yield 2.3, better than the S&P 500. BBB credit rating, which is investment grade, and a 58% long-term debt to cap ratio. So very happy with Whirlpool right now. Right now I'm just going to continue holding. If we look at the chart for Whirlpool, you can see here, this is the monthly. The monthly is very extended. You can see here like a lot of the stocks, they're extended. but you can see that it's way above the moving average, the weekly and the monthly moving average. So that's some concern. So I wouldn't be a buyer here. I would like to see this stock around $160, maybe around to this pivot. So $160 would be a price point where if I would wanted to add, that's where I'll add. But right now it looks to be overvalued and extended. And I actually have a stop loss to protect my profit. I think I have it around the $218 or so. Let me double check on that. If I go here, the Whirlpool stop loss 215, I have a stop loss. So basically to protect my profit if it goes lower, because again the weekly and the monthly is extended or are extended charts. So that's a concern there. So I'm not a buyer here. But I'm very happy with the dividend increase from Whirlpool, 12%. So very happy with that. The next one is Southern Coal. They only increased it with 3.1%. It is a utility company, so it's not a big dividend growth company. They pay dividends for a lot of years, but it's just not that 5, 10%, 15% increases. So there's just a modest 3.1% increase. Forward year of 4.07. If we look at my position for Southern, I'm up over 51% here. So if we look at the fast graph, let it load for a second. I think it's overvalued here as well. Let me see here. Yeah, I'm not buying here at this current price. As you can see here, the last time the high was at $70. So if it gets to $70, I'm going to sell, because that's just going to be overvalued. And then I'll just wait for a pullback around the $52, $55 range. We're having a respectable valuation. Right now you can see it only grow at 2.6%. The yield is very attractive though. However, at current prices it's almost 5%, or excuse me, 4%, and the earnings yield is 5%, so that's low. S&P credit rating A-, so again, high quality company is what I look for. Investment grade company, low long-term debt to cap only 58%. So you can see here earnings grow, and whenever the company, you can see here, gets below the 15 PE, that's when it's the time to buy. And so that's a good buying opportunities. So if we look at the chart for Southern Coal, you can see here, there it is right here, is almost hitting just over that support area, $64, $65. And again, next up range is $71. So if it gets to $71 or $70, I think I'm going to sell it or put a stop loss to protect my profit if it continues to run up. But it does look extended here on the monthly as well as the weekly. You can see here how this straight up run up. So we definitely need a pullback for it. But if it continues to run up to $70, I think I'm going to sell and just wait for a pullback. But right now I'm not a buyer. But again, these three companies, Johnson & Johnson, nice increase of 5%. Whirlpool at 12%, and Southern Coal at 3.1%. Very happy shareholder with that. But again, these companies I personally would not buy at current prices. I wait for a pullback. I wouldn't recommend you to buy either. Just wait for a pullback, put it in your watch list, and watch for it. Make sure you do your due diligence, research those companies. But I personally wouldn't buy it right now. So those are the three dividend growth stocks that recently announced dividend increase. Very happy with them. The performance of those companies, my portfolio has been very great. So I'm very happy with these three positions. If you're new to the channel, make sure to hit that subscribe button. I like to go over dividend stocks. Soon I'm going to be going over options, and I'm going to be providing a newsletter, a weekly option income newsletter. So make sure to check that out soon. So make sure to subscribe. And so thank you for watching, and I'll see you guys in the next video.